Welcome to our comprehensive Gbp/Jpy analysis for the week of September 29th to October 4th, 2025. In this presentation, we'll examine the British pound-Japanese yen currency pair during a critical consolidation period that preceded a significant market breakout. This analysis was prepared on October 5th, 2025 by the FXTech analysis team. We'll cover key price movements, fundamental drivers including Bank of Japan policy and UK economic data, technical analysis with support and resistance levels, trading strategies for both short-term and medium-term perspectives, and important risk factors to monitor. Whether you're an active Forex trader or a market analyst, this report provides actionable insights backed by data from leading financial sources. Let's dive into the details. During the September 29th to October 4th period, Gbp Jpy exhibited classic consolidation behavior, closing the week at 198.73 Japanese yen. The pair traded in an exceptionally narrow range between 197.84 and 198.73, spanning just 89 pips or approximately 0.45%. This represented a modest weekly gain of 0.28%, signaling low volatility and market indecision. The price action chart clearly illustrates this sideways movement, with the pair testing support near 197.84 on October 2nd before recovering to close at 198.73. This tight consolidation pattern is characteristic of accumulation phases, where the market pauses before making its next directional move. The low volatility environment suggested that neither bulls nor bears had conviction during this period, creating a coiling effect that would eventually resolve with the breakout to 205.30 in early October. Three key fundamental factors influenced Gbp/Jpy during this period. First, the Bank of Japan maintained its cautious normalization approach, with gradual policy adjustment rather than aggressive tightening. This dovish stance limited yen appreciation and kept the interest rate differential favorable for carry trades. Second, UK economic data presented a mixed picture. Employment figures showed a decline of 10,000 payrolled workers, raising concerns about labor market softening. However, this was offset by firm wage growth, indicating persistent inflationary pressures that could limit Bank of England rate cuts. Third, geopolitical risks, particularly escalating US-China trade tensions, created periodic safe haven demand for the Japanese yen. Despite these tensions, markets adopted a wait-and-see approach rather than aggressive repositioning. The interplay of these factors created the balanced fundamental backdrop that supported the sideways price action we observed. From a technical perspective, Gbp/Jpy was confined within a well-defined structure during this period. On the resistance side, immediate barriers stood at 199.00, with the major psychological level of 200.00 above that. Further resistance was identified at 201.24 and 205.30. For support, the critical level was 197.47, which held firm during the week's low of 197.84. Below that, major support zones existed at 195.00, 190.00, and 184.35. Technical indicators presented a neutral picture across the board. Both oscillators and moving averages showed neutral readings, with the RSI hovering near 50 and the MACD showing minimal separation. The trading range of 197.84 to 198.73 represented a rectangular consolidation pattern, indicating market indecision. This pattern suggested the market was building energy for a directional breakout, which would be determined by whether price violated the 199.00 resistance or 197.47 support first. For short-term traders operating on a 1 to 2 week time frame, the primary bullish scenario involved entering long positions above 199.00, targeting 201.24 initially and 205.30 as a secondary objective, with stops below 197.47. The alternative bearish scenario required a break below 197.47, targeting $195 and potentially $190 to $192, with stops above $200. For medium-term traders looking 1 to 3 months ahead, the bullish case carried a 65% probability. This scenario required a sustained break above 205.30, targeting 207.11 initially, then 208.09, with an extended target at 220.90. Key support for this bullish view was 201.24. The bearish case, with 35% probability, would be triggered by a break below 197.47, targeting the 190.00 to 192.00 zone, and would be invalidated above 208.09. The subsequent market action validated the bullish scenario. 3 categories of risk warrant close monitoring for pound sterling to yen traders. Geopolitical risks include escalating U.S.-China trade tensions that can trigger risk-off episodes, benefiting the Japanese yen as a safe haven currency. Additionally, UK political uncertainty regarding fiscal policy and potential tax increases could weigh on sterling sentiment. Economic risks center on potential divergence between UK and Japanese economic performance. If UK data deteriorates significantly, the Bank of England might cut rates more aggressively than anticipated, reducing the interest rate differential that supports carry trades. Conversely, if Japanese economic data strengthens with persistent inflation, the Bank of Japan could accelerate policy normalization, strengthening the yen. Market risks include the potential for rapid carry trade, unwinding during risk-off periods, which can cause sharp Gbp/Jpy declines. The pair's elevated volatility of 0.94% enables large price swings, while thin liquidity during off-peak hours may exacerbate movements and increase slippage. Let's summarize the key findings from our analysis. First, Gbp/Jpy consolidated between 197.84 and 198.73 during September 29th to October 4th, representing a low volatility accumulation phase. Second, critical support at 197.47 held firm, while resistance at 199.00 to 200.00 capped upside during the consolidation period. Third, mixed UK employment data and cautious Bank of Japan policy created a balanced, fundamental backdrop supporting sideways price action. Fourth, the subsequent breakout to 205.30 in early October validated the bullish continuation scenario, rewarding traders who recognized the consolidation pattern. Fifth, the medium-term outlook remains bullish with 65% probability, targeting 207.11 to 208.09, provided 201.24 support holds. Finally, key risks include geopolitical tensions, UK economic weakness, and potential carry trade unwinding. Thank you for watching. Remember, all trading involves risk, and past performance is not indicative of future results.